Our stock picks are based on our outlook on the general market as well. Our year-end target, we are looking at 1410, and if you look at the current level, we don't see much upside from here, probably use less than 10%. So the stock picks that we have naturally are more on defensive basis, as well as some thematic plays in oil and gas and plantation. So oil and gas, we are still very bullish about the sector. If you look at the current trend, the exploration activities are moving away from offshore to deep water. And so far, there's about 20 PSCs that have been given away and 16 new discoveries. KK is already operational last year, and we are looking at Gumusut coming on stream by 2010, 2011. So there's a lot of investment going to be poured in, and I'm looking at Petronas probably bumping up its capex to 30 billion ringgit by 2010, 2011. Right? That's a lot of money. So in line with this scenario, I believe those with asset heavy, people like Sapura Crest, will benefit a lot from the current environment. Compared to last year, I think Sapura Crest was not in the investment radar of many investors until Seadrill came in. People got excited why Seadrill came in. But actually, if you look at the previous year's performance, Sapura Crest was affected mainly because of the IPF division. Their profit margin, PBT margin, was less than 2% for the IPF division, mainly because when they lease the pipeline vessels from third party, many of those third-party leases are based on spot basis, so they incurred higher costs compared to what have they booked in with Petronas. Okay, that problem has been resolved with the expiry of that contract. They have actually tied up 2 pipeline vessels on a long-term contract currently, and then they have the Sapura 3000, which came in last February. It's already operational in KK currently. It will be completing the job some around 600 million by July this year. So things are working in favor of Sapura Crest currently. And apart from that, their T10, another rig, is already came on board last year August, and you'll see full year contribution from this rig in this financial year. So because of that, if you look at this order book, 5 billion, and then the Larsen Tabro, there's another rig coming on board next year. So on the back of such a strong order book and readily available assets, I think Sapura Crest will benefit from the current environment. So we have we actually prefer that stock. And another stock in the oil and gas sector, probably we would, I chose a rather new player in the market currently, which is Dayang Enterprise, right? Why Dayang? Because if you look at Dayang actually is not a new player for oil and gas sector. They have been around since 1980s, but they just got listed recently. But if you look in terms of margin among the listed players, they are the best. If you take out Petronas Gas, I think the net margin is around 35%. But Dayang's net margin alone is around 25%. And none of the oil and gas players can match that, apart from 1 or 2. So the reason for that, I think they're enjoying economies of scale. Apart from that, their vessels are new. They are in specialty vessels. They have this workboat, 189-man workboat. They got 2 workboats currently. They're going to buy another one. And if you compare to other vessel players like Petra Pradana, I think Petra Pradana average vessel age is about 22 years. And they're going to buy a few more vessels coming on stream over the next 2 years, 17 more vessels coming in. The average age will only drop to about 12 years. But Dayang vessels are pretty new. So because of that, they were able to garner a higher margin. And apart from that, if you look at the IPO prospectus, the projected forecast for 15 months was 45 million. If you analyze it, probably for 12 months, they'll do somewhere around 35 million, 35 million. But in actual fact, if you look at the last 6 months result, they've already done 28 million at core level. Core profit, already 20 million. So if you even analyze it, you easily get 56 million. And I believe the company will easily do around 60 million for this year compared to prospectus forecast of 34 million. So in terms of PE, it's only about 8 times, And they have 600 million order book in hand currently, about 1 billion tender book currently. And I believe they will make a stronger presence in the Peninsula Malaysia very soon, because they were in Peninsula Malaysia before. They lost some contract, then they went back to East Malaysia. Now they're going to come back to Peninsula Malaysia again. And I believe one of the existing players in Peninsula Malaysia going to probably, if Dayang has his ways, may lose a big contract to Dayang by end of this year. All right? Because Dayang is tied up with some foreign players as well as some bigger private players to come back into Peninsula Malaysia. So in terms of PE, I believe it's a very cheap stock currently, trading by 8.8 times against the sector PE of 15 times currently. So these are the 2 oil and gas plays I have. Plantation sector, I'm still bullish because biodiesel play, people get worried because if you look at last month on month palm oil exports in March, people are worried when the exports to EU drop, contracted. It's a two-digit contraction. But if you look at the latest number released yesterday, the exports to EU has actually increased by 36%. That means the biodiesel play is coming back into play currently, right? And apart from that, if you look at the demand and supply profile, supply is still very tight. Demand is going to be very strong, with demand coming out from India, China, and Brazil. And even if you look at on the supply side, currently there's a strike going on in Argentina, which started last Friday. This is going to affect the supply of soybean into the market. Currently, Argentina supplies about 59% of global supply. So it's going to affect soy oil supply, and soy oil supply price is going to go up, and it's going to affect CPO positively. So because of that, we have one CPO player that we would like to recommend, which is Kial Kepong. Why Kial Kepong? Because among the three big cap players that we cover currently, I think Kial Kepong is the cheapest. If you compare to Sime Darby probably trading around 12 times, IOI is 14 times, and Kial K is only trading about 12 times. And if you talk about CPO leverage in terms of every $100 increase in CPO price, I think Kial K has a better leverage of around 5% compared to 2% for the other two players. And apart from that, I think Kial Kepong also has a good palm tree age profile. If you look at their prime age category, about 34% of their palm trees are prime age category, another 35% on young age category. So I think they have a pretty well exposure to the rising CPO price. And apart from that, I think Kial Kepong is the only plantation player with exposure to rubber prices. 13% of their planted areas consist of rubber trees. So I think this is another positive factor for Kial Kepong. Apart from that, their recent acquisition of Ladang Perbadan Fima will add probably another 5 to 6% to their top line. And another stock that we have is basically on the defensive part is Tanjung PLC. Tanjung PLC, basically we like the defensive nature because 85% of their profit contributions come from power sector. And I think the investment in Global Ag is turning around positively. I think this year they're going to turn around very strongly. We are looking at 109 million profit for this financial year. And if you look at dividend yield, it gives you a fairly good dividend yield of 6.5%. And even if you look at the EPS growth, I think this is the only power company among that we cover compared to Tenaga and YTL Power. I think Tenaga and YTL Power, there will be a contraction in earnings this year. We are looking at a positive growth of 20%, EPS growth of 20% for Tanjung. And apart from that, if you look at on the balance sheet perspective, they have 1 billion cash currently, and they are looking at M&A opportunities in other part of the world, in Asia as well as South Africa. So I believe that could be an attraction going forward. And the last stock pick is basically with something which is related to oil and gas, but it's not directly oil and gas, is LCL Corporation. LCL Corporation is benefiting from the oil boom in the Middle East, and if you look at their current order book, I think mostly is around 1.3 billion. And there are rumors recently that from our sources that they are close to clinching a contract in Middle East very soon. An announcement will come out very soon. And apart from that, I think the exposure in India is also very big. Sun Gambak, they have tied up with Sun Gambak to provide interior fit-out services for some projects in India. It involves 40 different departmental stores. Each departmental stores can give them a revenue of 100 million. So it will be developed over a period of 8 years. So you're talking about a potential of 4 billion worth of sales over the 8-year period of time. Even if they don't get all the 40 stores, even if they get 20, you're looking at easily about 2 billion over the next 8 years. That gives you about 250 million sales each year. So I believe it holds a very good potential. And even if you look at the share cap currently, the market cap, sorry, if you look at the market cap is pretty small. And if you look at their niche offerings, they could be an easy candidate for takeover. So these are the 5 stocks we are bullish on currently.
You got a stock that could give us a query from the stock exchange on the rumor of new contracts. I think we'll leave out the word rumor.
You should edit your print version.
Yeah.
Dayang is I think something like Alam Maritime with the new vessels that you mentioned, but they also have an order book.
Dayang is more closely similar to Petra Perdana and Petra Energy. Their major scope of work currently is maintenance, topside maintenance, which is similar to Petra Energy. And they have the second biggest component is vessels. The vessels are similar to Petra Perdana. This is workboats, where you can have a place to work as well as you can accommodate 189 people on the workboat itself. So there's a similar comparison between Petra Pradana, Petra Energy, and Dayang. Now they're going more into hookup and commissioning. Currently, hookup commissioning only makes up about 2% of their sales. They lost a hookup commissioning contract in Peninsula in Terengganu, I think a few years back, and they are trying to come back this year. I believe indications are positive that they may win some big contracts in Peninsula hookup commissioning, as well as some big contract in Sabah when one of the contracts expire in January next year, which is done by another player currently in the market.
For LCR, I think the last quarter they had some problems with the forex because of the currency in Dubai, which is pegged to the US dollar.
Yeah. But I think that currency issue is natural for any company which involved in overseas operation. I think they are mitigating it. I think they are. If you look at their bottom line, the margins are pretty decent, and the order book is quite big, and they have available pool of manpower. They got close to 1,000 people to handle the jobs, and they are planning in and out of. They switch in and out between projects are quite decently done.
Okay, so we have on Bursa actually quite a number of stocks which may not be multi-baggers, but which may be maybe multi-baggers in multi-years. Yeah, I'd like to thank our panelists for coming out with their views on the overall economy, and also sharing their views on various stocks which are more on the defensive, with defensive attributes and that offer value. Thanks.